what's going on, everyone? So, as you all seen, we ended the market at some good numbers here, right? But then we kind of went down afterwards. So, we ended the market at $189.82. So, about 189.82 cents. And yeah, we were 3.3%, 3.13% up when we ended. And I guess you can say $190.20. Either way, we were up 3.13% as we ended. Now we are down 3.92% inside of Amazon at aftermarket. And that's actually kind of crazy because we had good earnings. As you can see here, the earnings for Amazon, they passed. So 1.59 estimated profit per share here. As you can see, 1.59. And as you can see over here, 1.37 is what they forecasted. And they got 1.59. And then they also forecasted their revenue over here at 155.29 billion. But you can see their actual revenue was 155.7 billion. So they did pretty good. But they went wrong in one area, and that is what pulled them down. So Amazon beats on Q1 earnings, but light Q2 guidance sends stock sliding. So they didn't have much guidance for what they're going to do next season. And actually, if you think about it, Amazon with the tariffs and everything, and what just now happened with Trump, with Jeff Bezos, with them putting the whole with them putting the tariff costs on the different products, people liked it, but the president did not like it, and he slammed him for it. So that is pretty bad. So, anyways, you can see here it's still going down, 3.79% down after hours. That's actually pretty bad. But hey, they you gotta have the guidance for Q2 as well as the earnings. You can't just pass on one front and then fail on the other. So that's pretty much where we're at with this. So we're gonna go over what they were talking about here, and then we're gonna do a little bit of technical analysis, see what we're probably gonna get coming into the next market tomorrow and possibly on Monday. But anyways, let's go over this. So, Amazon reported its first quarter earnings after the bell on Thursday, beating on top and bottom lines, but offered lighter than anticipated guidance for its Q2 operating income. So, for the quarter, Amazon saw earnings per share of $1.59 on revenue of $155.7 billion. So, Wall Street was anticipating earnings per share of $1.36 of revenue and $155.1 billion. So, yeah, that was pretty big. So, that's huge. It's a huge difference, and it makes a lot of difference here. So, AWS revenue, which is Amazon Web Services, which is pretty much their cloud computing software. Not software, but cloud computing platform. So, AWS revenue came in at 29.2 billion, which I believe is like their biggest revenue right now, versus expectations of 29.3 billion. So they didn't get as much revenue from AWS as they were expecting, but they did in other areas. So for the second quarter, Amazon said it anticipates operating income of between 13 billion and 17.5 billion dollars. Analysts were expecting 17.8 billion dollars. So the company saw operating income of 14.7 billion in Q2 of 2024. So the company also said it anticipates a 10 basis point impact to its Q2 sales. So yeah, this is pretty big news here. And this pretty much them just talking about what happened with Trump recently. So that's all political stuff, but it still matters. But anyways, Amazon has since denied that it's going to add tariff pricing to its main e-commerce site. So they said no, we are not going to add those pricings, but the damage is already done from there. The team that runs our ultra low cost Amazon Hall store considered the idea. So they're saying that someone who ran one of their teams considered the idea, but it was never approved and it's not going to happen. That's what they just now said. So this is how Amazon made money. So as you can see, Amazon Q1 2025 net sales by business segment. Total net sales 155.67 billion. Online stores 57.41 billion. Third-party sellers 36.51 billion. AWS 29.27 billion. Ad services 13.92 billion. Subscription services 11.72 billion. Physical stores 5.53 billion. So obviously most of their revenue is coming from their online stores. And then their third party sellers, which are on their online stores. So as you can see, that you can kind of lump these two together. And then AWS, which is a huge powerhouse in itself, and then others like 1.31 billion. So yeah, they're doing some good numbers here. But yeah, it says over here, with goods imported from China facing 145% tariffs and other countries facing a blanket 10% tariff, UBS analyst Stephen Ju estimates an amount. Investors note that some of 50% or more of products sold on Amazon will face some kind of tariff related price increase. So this could be bad for Amazon. Honestly, I think what's going to end up happening, Amazon's going to recover for this from this. Like, it's Amazon. Let's be honest. They're going to recover from this, but come in mid to late May and early June, if we don't get this tariff thing situated, that's when it's going to start affecting stuff like Amazon, because then stuff is not going to really be coming from China. And if it is, they're going to really have to put those tariffs on people because they're not going to be able to foot the bill themselves. So this could be bad if we don't get deals. So we have two scenarios, right? If we are not to get a deal right in enough time and just get something established that's actually good for both sides, we're probably going to end up seeing Amazon and everything else going down in the market as well. But if we do, we'll see things going back up to previous all-time highs and creating new all-time highs. So I personally believe we might not get it in enough time, but my personal belief doesn't really matter. So like I said, I'm not a financial advisor, and none of this is financial advice. But what we are looking at inside of Amazon, like right now, we are getting rejected at a little bit of a resistance area here. And this was once support before. So this is a very important area. You can see where we kind of ended the market off at. That was a very, very important level that we ended the market off at. It's almost like a coincidence, but I really don't believe there's any coincidences in this market. There are some really smart people trading in these markets. So it's at the point where like this is intentional. Like, just look at all these different levels here that we've already hit before. So this was actually a major resistance area that we had for a very, very, very long time. And as you know, support becomes resistance. Resistance, it'll become the support eventually as well. And yeah, we got rejected at this level. So that is a very, very, very significant level right there. Very hard for us to try to pass it. And it was just too much of a hurdle for us. So as you can see, we got rejected, got closer down here to the Fibonacci at $181. If we open tomorrow with less than expected, because as you also got to think, like Amazon and Apple were both doing their earnings, right? So we have Apple here with 1.65 inside of their earnings per share. Expected 161, not much above it, but they still passed. And then the same thing here, 95.36 billion was the actual revenue, and their forecast was 94.22 billion. So that was actually, they beat that by a lot. They beat it by almost, not almost, actually a whole billion. They beat that by. So Apple did extremely well with that. And as for Apple, where they ended up, they're not really as influenced by Amazon that much, but as you can see, Apple right here probably has the same issue where their forecast is like a little bit like for their forecast for the next earnings season, like they probably don't have that much guidance of what's going to happen next. So anyways, you've seen Apple drop as well. So that's pretty big. Both of these drops, and both of them had good earnings, but the guidance on them for the next quarter just wasn't that good. So I think we're going to see a drop further in the market. So I think we might continue to go down. So as you can see right now, Apple 2.14% down after hours. So Apple is also doing some bad numbers as well as Amazon. So anyways, let's talk about the next levels for us here with Amazon. Obviously, the Fibonacci at $180, $181. We're obviously going to end up seeing that, and we're obviously going to end up going down below that. So, I mean, some people would like to say otherwise, but hey, it's all up to you what you think is going to happen. It doesn't mean this is going to happen tomorrow or the day after that or even next week, but eventually things are going to start pulling back. So that's what I think people should really start getting ready for. And what I'm really looking at is the SPY, because the SPY has everything engulfed into one stock. So that's what I'm really tracking. I'm really tracking this, but I'm just kind of looking at the revenue for like Amazon and Apple and stuff like that. So what we're seeing right now with the SPY, I mentioned this inside of my previous SPY video. If we end up seeing the SPY getting up to like 567 or 576, I believe we're gonna have a nasty pullback if that happens. So, but if we can actually break that, obviously we're gonna probably start creating new all-time highs if we break 576. But if we cannot break 576 and 567 first, like if we can't get past that first, definitely gonna have a major pullback. So going into tomorrow, we gotta see what we get because the SPY was doing very good until Amazon and Apple released their earnings, and Amazon and Apple had really good earnings. That their earnings were good. It's just that it just they didn't have much guidance of what they're going to do next quarter, so that was really the issue there. So yeah, we're definitely expecting to see some pullbacks. I'm expecting to see the SPY, maybe going up a little bit more, Amazon and Apple going up a little bit more, and then having a nasty pullback that pulls us back down to our previous lows. And some people are like, hey, we already had a double bottom, right? They're like, no, this isn't going to happen again because we already had the double bottom. And I guess you can consider this as a double bottom, but personally, I'm not looking at it that way. I feel like the double bottom is more spread out. It's just not over 1 week, right? It could be honestly, and I could be wrong. Anybody could say in the comments whether they think that I'm wrong or right. But I think that we haven't actually experienced the real double bottom. I feel like we're going to have a nasty pullback, right? So what I'm looking at is some supports down here where I have it marked right here, either 534 as the second level of us hitting for support, or like 545 around this level. And then all these other lines are like minor support lines that I was doing because I was day trading. So I was using those for minor support lines. But yeah, this is what we got. Anyways, let me know what you guys think about this. Do you think that we're gonna turn things around for the next day in Amazon and as well as SPY and also on Apple or not? Because as you can see, it's still going down. Now Amazon is down 4.87% inside of the aftermarket. That's actually really bad. If you did puts, you're probably looking nice on those puts. And most people were thinking doing calls, but I've been had puts open. I opened some for the SPY, but I did not do it on Amazon because I I kind of had a feeling that Amazon was going to be a good earnings a good earnings quarter. But the problem wasn't its earnings. The problem was their guidance after the earnings. So I thought, hey, I'm not going to do puts because their earnings are probably going to be good. But I am going to open puts on SPY because I feel like the whole overall market is about to take a dump. So that's what I'm doing. That's my strategy. Let me know what you guys think about this. Do you think we're going to continue to pull back or not? And again, like I mentioned before, we can go ahead and look at the next level for Amazon. And really, this is just looking at previous support levels. So it's anything you, this is something that you can do at home if you want. Just look at previous support levels of where we ended up. I'm just going to go ahead and make it a little bit easier just by putting the lines here. Because as you know, the candlesticks can sometimes be a little messy. So first things first, I'm seeing visit support here, and support here as well. And when I'm saying here, I mean $171. There's multiple areas where we hit support there and we had resistance at 171. So that's definitely a significant area that I would say that you could watch out for. 171. And right now we are at 181. So during tomorrow's market, it's possible that we see a pullback to 171 if we go into the pre-market looking bad, right? If we go in that pre-market looking bad, then yeah, we just might have a bad time. Well, some people who did calls and stuff like that are gonna have a bad time. But anyways, another little bit of a minor support here. Well, I wouldn't say minor, but we're seeing 154, and that could easily be invalidated. But what I'm looking at after that is this Fibonacci here, very important area of 162. So that's also where we bottomed out here in 2024 when we had the I'll call it a crash. I guess we can call it a crash when we went from 199 all the way down to 162. So that's another level that we can end up seeing So just to kind of sum this up, let's go back to our candles, our candlesticks. So if we are to end up pulling back here inside of Amazon, let me go ahead and move this. If we go ahead and pull back here inside of Amazon from 189 to 181 tomorrow, well, we already did that, but I mean from 181 all the way down here to 171 tomorrow, this could be the reality that we see tomorrow. But if you look at the RSI, it kind of does look like it's about to cross right here, right? Almost like it's about to go up or go down, I mean. But like, what if the RSI does not do that? What if it crosses just a little bit and then immediately goes back up? So yes, we had this drop in this pullback here, but what if this pullback was just a small pullback and then we go into tomorrow, going down, and then we have that recovery intraday? That is another possibility. But the support 171 definitely seems like it's going to be an area that we're going to be heading towards. So that's definitely something you would want to get ready for. And the Stotch RSI right here, you can see the Stotch RSI is definitely preparing for another uptick here. But that was actually right before the market ended. This isn't showing anything for the pre-market. So we got to wait for tomorrow to see what's going to happen with that, because that could easily invalidate itself and then go downward after crossing. So anyways, this is all I got for y'all. Hit the like button and subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Let me know what you guys think about this earnings. And as always, I'll be back with another video.